Hello everybody, welcome back. No need to hang around too much. Bit of a quick video really. We're all waiting for the whatever the Fed want to do today. So 50, 75, whatever it is they want to do. I'm all for them doing a 75. Like I say, it's like good things will come to those who wait. We had a good reaction yesterday based on the CPI. We got ahead of that, didn't we, using the trueflation and just the general expectations that we've had on the channel. So that was fine. We've got a bit of a pump now. And I think we might be looking for a bit of an extension on that, especially if the Fed decide that they're going to go for 50 basis points. It's silly that we have to wait around for those sort of things. As far as the trading environment is concerned, it looks okay. We moved right up to that $18,000 zone for Bitcoin, exactly to the penny, to the point of a penny. You know, really, really good stuff, really. So exactly as expected into the box. But if we check the weekly, we also see the 10 exponential is where we got tagged as well, all at the same place. So a mega resistance, but the momentum still seems okay. And like I say, all it takes is the Fed to say, we're going to go for 50 basis point today. And that's it. Everyone's going to go crazy. Well, buy. And the reason for all of this, if you think about it, just have a look at the Dixie. So the Dixie, imagine being one of those guys that didn't see this coming. Obviously, not many people watch this channel. So the big guys with tons and tons of cash, in hindsight, should have watched the channel, because we did say the Dixie is likely to have found a major top around here. And we saved ourselves a fair bit of pain moving into Forex and other assets. Dixie's down 9%. Ooh, 9% in what? Just over a month. Ooh, painful for those who are sitting in a massive cash position. So now it looks like we're breaking down below all these major moving averages, continuing all the way down here on the monthly to what looks like 101.5. That's also a daily area of significance, I believe. Oh, no, it's just a horizontal. 101.4, which is this area here and this top around here. And again, the weekly was where we had most of our analysis planned for, which is why we exited our stocks, or we, being me, exited the stocks a couple of weeks ago as we came down to the 50 exponential, but the bounce has been extremely anemic. Not really felt it. So it looks as though we're going to get a bit of continuation anyway, based on the Dixie falling down. Now the S&P getting a rejection on its descending trend line within this descending triangle, that's fine. Again, I'm all for this being the bottom now, and us sort of hanging around here. If we break outside of a descending triangle before 70 to 75% of the way through, it's usually a good sign. So we got a roughly about 600 days worth of price action from the peak to where the apex would fall. We're currently sitting around 350. So really, we're only just over halfway. So more than enough time in this formation to break out and go bullish. And guess who else did that recently? Gold did that. So gold broke out and broke bullish from its descending triangle. Big descending triangle. Triple bottomed around here. Broke out and now is rallying. Now, you know, in all fairness, this does have a bit of bearish divergence forming now on the daily. So it's not straight up to the moon. Nothing goes straight up. But as far as formation is concerned, it looks pretty good. So we're looking for that sort of same kind of situation to occur over the coming months for S&P. Now, I'll tell you who else has done a move similar to this actually recently is Bitcoin. Bitcoin has broken out of its descending triangle, its major bear market one. So similar to gold in a way. The Everything Bounce 2.0 was nipped in the bud quite quickly by FTX, but prior to that, it was looking quite good, and we were targeting areas up to around 25, 26. Unfortunately, FTX denied us that, which is unfortunate because I did put a buy order in. The last time I had a big buy order in for Bitcoin was 19,500, which is obviously a little bit further up from where we are right now. It's also a pivotal area on the chart as well. So we've got the $18,000 zone where we got rejected from yesterday, and that's a big deal based on that weekly. But if we just take it back to a weekly now, I'm just going to show you something reasonably interesting. So we've got the Bollinger Band Center now sitting around 19,500, just ever so slightly lower than that. Now, if we want to see bull markets begin, we need to really get our weekly above this 20 weekly on the. That's a given. We have to see that. On the last bear market end, we capitulated, we accumulated, and then we finally made moves above the 10 exponential and then the 20 simple, and that's when the bull market began. This is why, you know, prior to the situation with FTX, it was looking pretty good. You know, we reclaimed this area over here. This 10 exponential, we started to more or less did actually reclaim the 20 as well, and then FTX went, no you don't, TA doesn't work, which is true. TA doesn't work in the face of black swans. Of course it doesn't. Of course it doesn't. But there's no more black swans at the moment for what we can see. There's a bit of talk of Binance and money laundering and stuff like that. But, if we tried to trade every chart based on potential black swans, you would never make a trade. You would never do it. So what we're looking for here is long term, basically over the next few months, getting above the 200 exponential, sorry, the 10 exponential and the 20 simple, the Bollinger Band Center on the weekly. We still have the bullish divergence on the weekly RSI. We still have a very weak but steady accumulation vibe taking place on the MACD. And we've also got the bullish divergence formed on the money flow index, similar to the same way that we saw it on the previous bear market end. Bang, low, high, low, marks the absolute low. There you go, straight up. So things still look quite good on the long term. I'm not looking for massive catastrophic dumps unless, of course, something else happens that can't be foreseen on this chart. This chart doesn't particularly look like it wants to dump and make a new low. Not right now. All right, we're looking at this on a weekly. Looks okay. We looked at the overall trading environment with FX markets. We looked at gold very briefly, which is good. Even stocks look reasonable. And we're just waiting for the men around the table to say what it is that they're going to do today to give us a bit more of a short-term rally. And if we start to get back into this box of 18,000 to 18,500, then we can build a base to retest the 19,500, which is your 20 weekly. That's where I'd expect a decent rejection at that point. Maybe not one that brings us to a new low, but one that sort of makes us hang around in this area like we did previously. And that's where we can have a building block, a block of accumulation moving into next year, where we actually do rally from properly, have a decent big fat rally. And that rally is most likely would take us up to a 200 simple moving average, which is sitting around 24. But this is long-term stuff we're talking about on a weekly here, so we're talking like between, well, it could happen this month, but most likely over the next few months into next year. So long story short, things look quite good. Now, there's one last thing I'm going to show you, which is obviously going to be a bit of clickbait for you here. Altseason around the corner, maybe. So we've got our 200 exponential, which is obviously an area of significance for anything, which is acting as resistance. So resistance for the dominance chart normally would respond with upside for altcoins. So we've seen this over here, big resistance over here, bang, all the way down to actually 38.8. So big pullback from that one. A move up here as well, bang, all the way down to the 40% dominance. Now we did break out here. I think this is due to Binance's FUD at the moment, and we are approaching a 200 exponential moving average, which is sitting around 41.5% dominance. A nice flat area as well for people to consider. 41.5, easy to remember. So it wouldn't surprise me at all if we saw some moves from there, a rejection from there. A rejection from there is probably only going to be 1% worth of rejection, but well, the market cap of crypto is still pretty big. You get a rotation of 1% from Bitcoin to altcoin market cap. You can easily see moves of 20 to 50, maybe even 100% on some of these altcoins. Right? So no altcoin is created equal. You go for the ones with the best setups. And that's something for another video, maybe. Or maybe a Patreon live stream. I don't know. It's up to you. Do you want to join? That's what we do there. Anyway, it looks quite ripe. Maybe not immediately, but soon for some period of alt season. Obviously, this would be invalid if we start to close above here with conviction. But still, I would favour alt season more than anything else as we approach that level. It wouldn't be a great, massive, amazing alt season. We take what we get where we get it. Like I say, 20, 50, 100 at best percent. But still looks like a worthy setup of such a follow-through. Right, there's nothing much more to say about it than that. That's pretty much it. Now, if you like this thing that you see in the corner here, you can buy it. There's a link in the description below. It's called an asset watch. It's quite expensive, to be fair with you. They gave it to me for free, obviously, because they want me to try and sell it. Obviously, I'm not going to force a sale on you. You've got your own mind. If it's something that you want to buy, maybe you can put it on your, ask Santa Claus for it, maybe. I don't know. There is links in the description where you get discounts. Use the coupon code CryptoClick and you can have it. And you basically program it quite easily with an app just to bring up whatever it is that you want to see. And to be honest with you, sometimes when I walk into this little corner of my house that I've been relegated to for trading, that's the first thing I see when I open the door. And if it's a green day, I walk in here and go, yes. But it's a double-edged sword, especially recently. You walk in here and it's a red day. You walk in here and go, oh. So it can either ruin your day or make your day, depending on what the price is at that very moment in time. It's definitely a cool little thing, but again, I think it's quite pricey, but it's up to you if you want it, and the links are in the description below. Thank you for watching, guys. I hope you have a nice day. Take it easy.